Our stock of the day, AMA Group, its shares, they have resumed trading after the smash repair finished up a $55 million equity raising at a 29% discount to the stock's previous closing price. The group said the funds will be used to repay, or help repay $35 million in debt and provide liquidity and working capital. Now, its shares had already tumbled around 40% this year. They're down a similar amount today, in fact, off the back of that discounted capital raise. So, Mark, what is going on here? It's also had significant changes with the board and with management. It's still dealt with those issues through COVID, which it found very difficult, and it's got inflationary pressures it's dealing with as well.
Well, I think you've almost summed it up. There's a lot of moving parts and a lot of issues with this, and new board, and obviously COVID wasn't a great period. Restructuring debt as well, and they've been a real victim of of the labour costs as well, and a struggle to find labour in a really tight labour market. So they're saying their time to fix their cars and trucks has jumped by an additional sort of 4 days, which is sort of about a 30 to 40% increase in the time. So that's seen their customer satisfaction drop quite significantly, so I don't really see it is necessarily as a bargain at the moment. Obviously it looks extraordinarily cheap in terms of, what is it, down about 95% there on a 5-year. I think I'd be very much wait and see for new money. If you've got them and you've held them this long, it's probably a touch of lack of discipline, I would say, because I think you've had plenty of opportunities to probably to get out of those, and as the problems have accumulated. But I think you're largely stuck with them now if you've got them. And I think I'd just like to see how this washes out over the next sort of 6 to 12 months. But I mean, they were they are the biggest smash repairer in Australia, I believe. So they've if they get themselves organised again, and this cap raise and provides that working capital and reduces their debt, etc., and they stick to the plan, then I think they might be worth looking at. But at the moment, I think there's too many negative moving parts to touch it.
I'm just wondering what it's prompted me to think too, given where technology of cars are going, with collision avoidance technology, self-driving cars, whether the business, it's going to face significant problems going forward because it's simply going to shrink. You're not going to have as many collisions, essentially, are you, in terms of repairing?
Absolutely, and then there's going to be a lot more Teslas, and they've got a lot less electric vehicles, have a lot less moving parts than combustion engines. And typically their model is you get them repaired with the actual manufacturer as opposed to a smash repair company. So it's just the lesson from this is debt. It just had too much debt, and when everything was going along well, the markets tend to ignore that kind of thing. But as soon as COVID hit, of course, no one could drive on the roads, and so there was no smash repair work, almost stopped overnight. And the balance sheet was shown to be overly aggressive, and there's been numerous capital raisings these guys have done ever since to try and get that debt down. I think the only thing they've got going in their favour is the insurance companies need these guys to survive, because if they go under, the insurance companies will then, like Suncorp flirted with actually doing this themselves, and they said it's way too hard, they got back out of it. But there will be a massive issue in terms of who's going to fix everyone's cars, and the insurance companies will have to pay a lot more potentially. So I think there will be some support in that case, but I couldn't buy this stock. There's too many shares on issue now. They've raised so many times. It's any value that was there. I mean, you can look at it and think, 6 cents is cheap, but you've got to look at how many more shares are on issue now versus when they were $1, and I'm sure it's gone through the roof. So probably one to avoid still for me.
Yep. Okay. Mark, is that are you calling it an avoid, or are you saying if you're holding it, you're stuck with it?
I think you're just stuck with it, basically. Yeah. So
it's a forced hold.
Well, it's a forced hold essentially. But yeah, look, and I totally agree. The EV, I mean, there just genuinely will be less crashes. And, I rented a Tesla to go up the coast recently, and And that auto drive functionality is just unbelievable. So
Yeah.
you, even if you're a lot of crashes just where you momentary distraction. Well, it just removes all that
Well, it's
completely.
taking human error out of, isn't it?
It does. And I mean, apart from that, basically, if there's more hailstorms, you might get more, but that's really about it. So.
Yeah.
All right, so that's AMA Group, which is largely negative, as we just heard. All right, let's get